Yeah, but we have also joining us, our think tank panel. We have Mr. R. Gopalan, who's the former finance techie, joining us today. Followed by we have Mr. Dinesh Khara, who's the former chairman of SBI. Rohinton from Deloitte. We have Pratik joining us from Wari Energies and George from ASK Managers. Gentlemen, thank you very much for joining us today on budget. To begin with, Mr. Khara, from macro point of view, what do you think the FM can do to ensure that we have a stable framework as far as fiscal is concerned?
I think if at all there is a focus on the growth, that will probably take care of the fiscal equation well. Because what I understand is that, what we have seen in the past, it has been the focus on the growth, which has led to the front loading of a lot of infrastructure spending. That has ensured that despite the global headwinds, the country continues to do well. And we have become the oasis of growth in the whole of the global economy. So I think going by that, my sense is that till such time the private sector investment really kicks in, which will, to my mind, will be a function of the global environment. And maybe government will have to really focus on infrastructure even in the current year also. And with that, probably the growth will be ensured and the fiscal automatically will get taken care of because GST and the taxation which will accrue from that will take care of the requirement of ensuring the balance in the fiscal.
George, capex is something which we're going to talk about a lot in the budget. Expectation is over 9% jump in capex outlay there. But the bigger thing is the private capex coming back. If you look at the L&T commentary after earnings, the order book comprises of more private capex this time as compared to last year. So it was 25% of the order book last year. Now it has gone up to 36%. So is private capex coming back a good kind of a buffer for the finance minister where she can now focus on other stuff?
Yeah, definitely. If you look at the last 5 years, the capex has been going up, starting from government capex, which has grown in the last 5 years, 22% CAGR. And now, if you look at the BSE 500 companies, and it is clearly visible that the capex is inching up. Capex to sales, if you see, it has been going up from FY22 onwards. So there is a clear indication that this early capex cycle is over. Now the full-fledged capex cycle has to kick in. If you compare to the past also, after a big consumption boom in 2010 to 20, we are seeing a capex coming back. So it is mirroring in some shape or form of 2000 to 2010 decade, but the global growth is the biggest challenge. China is growing at lower pace, and US with a magnificent 7 doing well. Otherwise, the rest of the economy is not that great. So it is a very challenging environment in which, the growth has to happen. But in my mind, it is a clear capex environment, and government will push the capex. Whether it is a government capex or even creating conducive environment for private capex is also very much possible.
Rohinton, given the kind of capital outflows that India equity markets have seen, or just the entire markets as such, is deepening of the bond markets, get the bond markets to be more livelier, more healthier. What can realistically the budget do? How feasible it is of bringing parity between capital gains for bonds and equities? Can we expect anything this budget?
So it's very difficult to say. As you know, they actually detached the two in earlier years. And essentially, if you have mutual funds which are more debt-oriented, they tend to kind of attract a different rate of tax as compared to non-debt-oriented funds. But the thing that I would see over here is that the government is going to push to attract longer-term, more stable foreign capital into our capital markets. And the way to do this is perhaps not color the entire stream of FPI players, but possibly look at potentially the big players like the sovereign funds, the pension funds. Already we have a special regime for sovereign funds. I estimate that one area that the government can look at is to extend that to bigger certain types of other funds, like bigger pension funds of foreign countries, etc., which can come in and invest and bring a kind of a modicum of stable capital into our stock markets. I think that's what India really needs. We need this especially during the period until we can settle our externals situation. And unless we bring in foreign direct investment and long-term capital from abroad, we will not be able to rein in our currency depreciation.
Mr. Khara, you want to add to that? You agree with Rohinton, I guess?
No, I do agree with what Rohinton mentioned. Well, we have got a very clear focus when it comes to manufacturing on some of the newer industries. So I think if at all we can have long-term capital coming in through FDI route, that will go a long way in terms of course, supporting our currency. And as well as if at all currency gets supported, we'll have a situation where even FIIs will also be stable in the country. So I think that is one of the crying needs, if I may say so, of the economy, if at all we can get the long-term capital through FDI route.
Before we go to Prateek, I just want to check with you the GST numbers which have come in, 1.93 lakh crores in January, and that's for the month of December, which gets reported in January there. I think the buoyancy of the tax which the government was looking at is coming back in terms of consumption, which is there. 1.93 is it's a 6% jump on a YOY basis, but we were looking at FY26 tax collection to be lower by, or total collections to be lower by around 1.5 lakh to 2 lakh crores. Now that the buoyancy is coming back, do you think the government would be little bullish in terms of kind of tax projections in FY27?
I would say that the relief which has already been granted, both in terms of the personal tax and the GST, I think that has really helped the consumption economy. Much of it will depend upon what is the space available for the government to really give any further reliefs. But nevertheless, I would say that maybe there could be some kind of tinkering in terms of when it comes to tax on the interest income of the banks, etc., because that is another area which is actually becoming a bit of a concern, because the deposit growth for the banking system is actually quite is not as strong as it should be. And eventually, for supporting the economic growth, it would be strong banking system will also go a long way. So I think maybe if at all there could be some tinkering in terms of interest on taxation on the interest income. That may be one of the areas which may be touched upon.
Okay, very, very relevant points. We're going to take a very quick break on that note. We'll have R. Gopalan, former finance secretary, and of course, we'll bring on board Abhishek Parikh, group head finance at Warrior Energies as well into the conversation. But after this, a very quick break.
All right, welcome back. Packed panel, of course, and we're also going to be joined by R. Gopalan. But very quickly, let's look at what markets are up to. Nifty has inched back in the green, so that's the one positive that's playing out. IT down 1%, so some of the larger cap sector spaces continue to be under pressure. The Nifty Bank, though, holding on, absolutely flat. I wonder what the Nifty PSU Bank is also doing. Let's pull that one up and see the move with regard to the Nifty PSU Bank. And it's 1% plus lower. Okay, it's recovered from that 1.5% low that it clocked right at the start of trade, but it's down around 0.8% there. In terms of the breadth, it's an extremely tough breadth as well. Within the Nifty 500 universe, the breadth is over 300, declines to around 200 advances. So that breadth also not improving or not looking to improve. The Nifty 50 breadth also currently sitting in the negative. It's 1% or near 1% low on the Nifty small cap, 0.5% low on the Nifty mid cap. So those are severely underperforming the Nifty 50 index, as has been the case. So that's broadly the play. Now today, obviously, it's all about metals, and that move on the Nifty metal which was down 4%. You've seen a bit of a recovery from that, but it's still 2.5% lower. So it's not looking anywhere close to a full recovery, at least at this point. A percent lower on Nifty IT, I spoke about that. 0.7% lower on the Nifty Realty Index as well within broader markets. FMCG is down 0.5% thereabouts. What's really perking up is the defense index. It's up 2% in trade. So that budget trade really playing out on the Nifty India Defense Index. BL is one of those stocks which is up and away. The other, let's quickly pull up some of those names. A HAL, a Cochin Shipyard, a Mazagon Dock, a GRSE. Let's see what's playing out within that pack. And Auto is doing fairly well as well. It seems that the budget trade, again, playing out a bit on the Nifty Auto Index as well. So those two indices have perked up sharply. And when you look at it from the day's low, we're seeing a decent move on both of those because neither of those were in the green at the start of day today. So we've seen a decent move on both of those indices. We'll keep an eye out on both of those indices. Aisha. Okay, let's go across. We have R. Gopalan, former finance secretary, joining us this morning as well. Mr. Gopalan, let me come to you with regard to what the fiscal room or the fiscal space is with regard to where the government is concerned, because essentially all conversations we've had over the last couple of hours boils down to a couple of surprises, and a predominant part of the surprise could well be within the taxation space. Rationalizing maybe, for example, STT and capital gains, giving some benefits to FIIs in terms of tax benefits for investments in India. Do we have that kind of fiscal room? Do you believe we can afford that at this point?
I really don't know. If you look at the fiscal numbers, say we are looking at about last year or this year is about 8% on nominal terms, and we need to have at least about 10.5 to 11% in nominal term growth, so as we are able to get enough revenue and therefore enough income to the public and therefore enough savings in the economy. So that's something, how that is going to pan out is something which we need to see. And remember, there are 2-3 things. We have the Finance Commission award has been given. So to that extent, the sharing, horizontal sharing and vertical sharing will take place, and that will be reflected in this budget at this point in time. And also please remember, there is a pay commission recommendation, which is though to be paid from next 1/1/27 onwards, but then the point 28 onwards, but then the point remains that it is effective from 1/1/26. So to that extent, there's a huge amount of money that will go out. And look at the debt. The debt is looking at about, we are looking at 56%, and now at the center level, we have to go down to 55%. Of course, there is some room there, because with that, the fiscal deficit from 4.4 to 4.2 is feasible based on the current, nominal growth GDP numbers. It is possible to have a look at. Here, a lot of things, we are given quite a good amount of relief in taxes, both in income tax and the GST. So we need to see how we are able to calibrate in such a way that revenues grow. There's a buoyancy in the revenue. Now, buoyancy to the extent of a 1.2, 1.1, 1.2 will be desirable for us. So let us see how that numbers are going to be fixed there. So based on those numbers only, many expenditure items will, go in this particular budget.
George, sectorally from an equity market perspective, what do you think the budget could touch upon?
So the sectors which has been in the limelight in the last budget was in defense, and you saw railways getting good push. So I think this budget is not going to be very different. You need to have the same growth agenda playing out from the government side for these sectors. Alongside, the biggest consumption related benefits which has been passed on through GST cut. All those things have to flow in, which again was visible in the case of two-wheelers and four-wheelers to a certain extent through the festive seasons and so on and so forth. But we need to see what kind of consumption pickup is possible also. So CapEx push to the relevant sectors like which is more linked to the government, and the PSUs has to happen, and that is something which I'll definitely look forward. But at the same time, some SOPs on the agri side, which will definitely benefit, and affordable housing, something which I will look forward.
Abhishek, commodity sell-off is happening as we speak. You are one of the user industry, and you should be happy for it because silver prices are correcting. But how do you look at the entire commodity play from a user industry point of view?
So certainly, if we look at last couple of days and especially last couple of months, the rally on the commodities has been raising far beyond questions that are we really consuming that much of commodity? Has there been real incremental consumption of those commodities at the industrial sector, or is it more of a for trading which is playing a larger role? I think that needs a closer look. From industry perspective, what we really see is that consumption has certainly been growing all across. So the incremental capex and incremental consumption of industrial goods certainly will lead to some sort of cushion to the industry price in general, but certainly not in the trajectory that we have seen over last couple of days, like 30-40% day change in the price is I would say nightmare for any trader would be. So I think that is something that we may really not consider as conducive for industry, but certainly with the real numbers on ground, it seems that the commodity prices do have a good amount of cushion in terms of consumption, but at a steady state consumption rise of 8 to 10%, not more than that.
But Abhishek, we're looking at India of the future. We're talking about 2047 being Viksit Bharat. Can this budget be that visionary budget wherein companies and sectors such as your come into play? And if so, then what is your ask from the finance minister today?
In fact, last 10 years or last decade, if we look at the budget commentary, it has been the budget which is forward-looking, more reform-oriented, driven by capex from the government. But I think we are standing at a juncture where we look at private capex or private investment to be pushed more through new incentives like ALMM, PLI for solar value chain, for energy storage, and for going ahead for hydrogen electrolyzers, something that will be in focus. We really expect these new sectors, which will not only lead to more capacity buildup, but rather try to create a resilience in terms of energy security, energy continuity, and help in the new age technology businesses like AI and data centers. So we really expect more sort of a push on capex through private sectors, more conducive policy towards the manufacturing, upstream manufacturing, especially on the energy storage, on the hydrogen, as well as something on grid is something that is more expected. Even if you look at the economic survey, what interesting this time was the demand not for more capacities, rather for more integration and resilience of energy supplies through the grid network. And I think that is something that we are really keen to look at in today's commentary.
Interesting, Mr. Khara. Power sector. We have not been talking much about it, but if you are looking at data center capacities of nearly 10 gigawatt by 2030, the kind of power that we need and the kind of integration that Abhishek spoke about, that requires a high amount of capex coming in. Do you think budget will be able to focus on newer sectors for capex?
No, I do agree, because when it comes to the kind of computing which is required and required to be done, if at all we are going for adoption of AI in a big way, then of course even data centers population will actually grow up even significantly. Apart from that, even GCCs also, which is another focus area for the services sector in the days to come, that will also lead to a significant upside as far as the power consumption is concerned. So, when we talk about the power consumption, we have done well in terms of the renewable in last couple of years. But at the same time, when it comes to base load, which is essentially either through thermal or it is through hydel, or now, of course, nuclear is another option. So I think my sense is that, of course, we have not invested so well in terms of thermal and the other options which were there. I think I expect that there could be some focus. Of course, there's a talk now in terms of the nuclear as an option, but of course it will take some time. So I think simultaneously thermal, which is very well there in the economy, maybe we'll have to selectively get into thermal, and we'll have to think in terms of how can we consume the green coal and how can we minimize the transmission, which is actually damaging the environment. So how can we really address to those concerns? To my mind, it is bound to be a focus, because in the days to come, we are going to have significant uptick as far as the electricity demand is concerned in the economy.
Rohinton, tax incentives for new sectors like data centers and all, accelerated depreciation. Abhishek spoke about the battery and energy storage system,
Yes.
which is there now with every renewable tender which is coming in. Do you think that could be one of the possibilities that you have accelerated depreciation coming in for some of these sectors?
Yeah, we have seen in the past also, because a couple of years back also there was a tax holiday which was given for the wind power sector at a point of time. Maybe going by that, maybe that is, those are the areas which can actually be looked into from the taxation point of view. When it comes to tax relief per se, in terms of reduction, it may not happen, but tax holidays can perhaps be thought of to ensure that there is a capacity should come up fast and it should not create a situation where power is deficit in the economy.
Rohinton, your take on this one?
So I personally feel that the government has already signaled a change, a moving away from tax holidays to more direct benefit type of schemes. So schemes such as PLI are the ones which are prevailing just now, and where they specifically want to give certain benefits to a particular set of industries, then to my mind, the PLI scheme and the other state incentive schemes are the ones that are in play. Even now, if you see, for GIC benefits, where earlier we had Section 10A and 10AA type of benefits, those have been withdrawn, grandfathered, and now we actually have state governments coming out with incentives that if you set up a GIC in a particular area in my state, then these benefits accrue to you. So I see the kind of spectrum changing from a tax holiday to more a direct benefit type of scheme being rolled out.
Okay, well, I guess that's the government success. Look at Tata Motors passenger vehicle sales figures. It's a solid uptick on the total sales count itself of almost 47%. The domestic PV sales, which includes EVs, by the way, that's also a staggering 46% jump up. Of course, these are year-on-year numbers. Month on month would be a better and a clearer picture. Tell you what, we'll take a very quick break, come right back. We'll continue our discussion with our ET Now Budget Think Tank.
Welcome back, and this is of course the Budget Think Tank, and what we're trying to get you is insights as to what could come in the budget. Now, of course, outside of the broader numbers and the big picture, really the big question, and let me come to Mr. Gopalan on this one, is the fact that while services, we've done very well on the services side of things. Really what has lagged is manufacturing, and if we were to get to 6.8 to 7.2% in terms of GDP growth, and that's really the target, the aspiration in FY27, what we will likely have to do is we will have to push up manufacturing. Mr. Gopalan, where is it that we're lacking where manufacturing is concerned, and what tweaks within the budget, if any, can be made as a step in that direction?
Okay, let me look at it a little medium term. Today, the problem is the share of GDP in manufacturing is 18% in constant numbers and 12.8% in nominal numbers. And the gross fixed capital formation in manufacturing has declined from 21% to 16%. So we have a problem. Now, the problem we need to overcome through a number of issues, both short-term and medium-term. R&D and innovation is an area where we need to focus on. Skilling is another area. I think in this budget, let us see what new measures are getting announced for skilling. The MSMEs is another big area where we need to look at, because MSMEs contribute quite a lot to the exports, the GDP, and to the employment in the country. So how do we ensure that the kind of measures already taken for MSMEs, how they are broadened to ensure that MSMEs are able to get even, capital without, any, collateral or some such thing guaranteed by the government, how that, goes forward. Then tariff reductions to ensure that, on the, global value chain, how are we able to get into that? And tariff reduction is very, very important for that purpose. Obviously, ease of doing business, which we are taking steps, but it needs to go a little further. And how do we, in the locations in which these things do happen, like clusters for production, clusters for export. So all these things, how we are able to get that into the budget is going to be some important issues facing manufacturing.
Mr. Khara, that's the important point. Given the kind of global turmoil and flux that we're living in with regards to, the tariff situation and the changing geopolitical world order, do you think export will be a big focus in the budget?
Well, if we look at the composition of our total GDP, it does not really figure out as a very significant component as far as export is concerned. But yes, having said that, I must also mention when it comes to employment and the quality of employment, this is one of the very important sector. So I think having a focus on this sector will certainly help in terms of ensuring the quality of employment improves in the economy, and which will of course show up in terms of the consumption going up also. So I think the FTAs which have been entered into will certainly support. Having said that, we perhaps cannot ignore the fact that today when it comes to consumption, about 30% of the global consumption is there with US. 17% of the global consumption is there with China. So about 47% of the global consumption is into these two countries. So I think we actually need to really broad base our export markets so that we don't have the impact of this concentration of the potential export destinations. So that is something which we need to address. And I think there also in these markets also, if at all we can enter into, if at all we get into exports of the commodities, which can have the relief in terms of the taxation, this will be another step which perhaps can be thought of. And I think we are having a very clear focus in terms of innovation. We are having a clear focus in terms of coming up with the semiconductor cells, etc., solar cells. We need to capitalize on that. And once we do that, perhaps we'll have a situation where these are the specialized exports which will happen from the economy, which will go a long way in terms of supporting us in terms of employment, in terms of exchange rate stabilization also, and in terms of growth overall.
George, large opportunities available within this manufacturing space for India. What are you seeing in terms of sectors, subsectors being at inflection points? Would aerospace likely feature? Are there any other sectors within manufacturing where India is likely looking at the cusp of possibly the cell phone type or the EMS type revolution within manufacturing? Yeah, to make a case of that.
Yeah, so it's a very interesting time. When you look at the entire capex which is happening currently, and through the support of PLI, it's on EMS space and a few other sectors. But what is needed is the gross capital formation has always been around 35%. It has to be inching up, and when you look at from the success factors what we have seen in the past, which is mostly in defense, railways, mainly because of the government push, but that definitely needs to continue, because the environment is in such a way that the export market, many of the players are not confident enough to take the bets to increase the manufacturing exports, because the export market itself is looking volatile. So the bigger picture in my mind, rather than focusing on there are a couple of key areas where government needs to focus on, in my mind, is how we can increase the capital flows when the FDIs are going away, or net FDIs are negative, or FPIs are negative, and the currency is not in a stabilized environment. That is where probably some big measure is required to stabilize all these aspects, so that the environment becomes much more conducive for the businessmen to do the business. Whatever the manufacturing exports or service exports which is happening can be continued and can be made it better. So if you see the services exports, it's $330 billion exports. Even if 10% correction, that means there is a big pressure on the flows towards almost $33 billion, so which needs to be definitely be looked into in a very, very different light. And that is something which is needed so that the exports, consumption, as well as the capex and related sectors benefits together.
Abhishek, what is the kind of expectation you have from the export point of view, because you guys also export a lot of panels to the US, and there we're facing a lot of challenges which is there. Is the new FTAs which is getting signed is going to help you diversify into those regions as well?
Certainly, export is a very, I would say, important aspect of growth trajectory going ahead as well. If you look at the global economies over the last 20 years, so which are the countries which have actually seen more than 7% growth for consistent 20 years are the ones who actually focused on exports. India today, as rightly said by fellow panelists, that has very smaller bet on the export right now. But what we look forward is a larger area to work at. Because if you look at the consumption in India, certainly a very conducive numbers we get. We get a lot of comfort from the demand in the domestic market that is increasing. But if we really want to build India as a manufacturing hub, if we really want India to compete at global scale, go out and compete with likes of China, likes of what Vietnam has done, right, likes of what the other smaller countries have been able to demonstrate, I think India is on the right set of point, and we really see hockey stick kind of a growth in exports market. But all we need to look at and consider is we really need to be consistent with the with the policies the way we have seen from the government over the last decade. And I think this sort of continuity on the focus of manufacturing sector through policies of Make in India, through policies more helping the export oriented companies to go out and even look at alternate markets. Last 1 year, if you look at the market which closed down, or I would say went into trajectory, but it seemed to be a difficult market to crack after the tariff impact came on. We flipped immediately as a country and started looking at alternate markets to exports, supported with the recent FTAs that have been signed, especially the FTA at the closure which is happening with EU, the FTA with New Zealand, the FTA with Oman, the FTA with Australia. All of these are really opening up new era of Indian manufacturers. Go out, show their skills, because once the scale comes up through the consistent reform, I think we will be in the right point to become the export-oriented economy as well going ahead.
Okay, interesting points there. I just want to check in actually on what the market is doing. And if you ask me what the Nifty is doing, it's doing nothing. It's really manawing a Sunday, or at least waiting for the finance minister's speech. 25,450 is where we're currently at. Absolutely flat, a meager 33-odd point move. But look at individual sectors. Look at what's happening within the entire defense pack. Harsh was just highlighting BEL continues to show leadership, leading the Nifty 2.5% higher for BEL. You've, of course, got a Cochin Shipyard, Mazagon Dock, Paras Defense. Their entire cluster is holding out very, very smartly. Crompton CG Power. Now, these also very well could be very budget-sensitive trades. Swiggy, of course, is seeing a move after that crash that it had on Friday. Keynes as well is holding up, and I wouldn't be surprised if Dixon, etc., or an RR Cable, etc., the entire EMS theme also could be propping up. These also tend to be very sensitive budget plays. But look at what's happening on the commodity end of the market. MCX, that's cracked now 11.5% almost in futures. The entire silver trade is unwinding. Hindustan Zinc is down 9%. Even Nalco is down about almost 7%. Sentimentally, look at what's happening to Muthoot. That's also down 5% because it also moved up with the rally in gold all through the year. You've got Angel One. I think they also have some commodity trading of a play. That stock also lower by about 3%. But largely, it's metals, which is really dragging the markets lower today. And Hindalco, of course, is your top loser today, which is down about almost 3% as we speak right now. But George, purely from a market perspective, I know while the budget can't really do anything much to lift the market sentiment, but hoping against hope, forget what's going to happen on capital taxes as well as gains. But other than that, do you think mentions of tariffs, global uncertainty, would at least give some clarity to the market on what the government thinking is and how they're planning to cope up with it all?
Obviously, if you see the manufacturing exports to US is almost, $87 billion, which was under pressure now because most of the businessmen, whom I am talking to, a lot of our clients who are big businessmen, what we realize is that they're all finding it very difficult in the overseas market to understand how the market is shaping up, and daily the tariff-related news flows and the currency movements are killing them. So there is a definite need to stabilize this whole situation in terms of, one, the environment in terms of exports, as well as the currency stabilization, and also the incentives with regard to the export-oriented businesses, so that the flows can continue and the exports can be much more in a saner version. So what I realize is that government revenues are, because of the cyclical slowdown what we have seen in earnings, revenue will be under slight pressure. But at the same time, they have to focus on the capex related push, which has been the case for the last 5 years. And especially in the environment like this, more push from the government and alongside the stabilization in the currency market and some color on the tariffs, which is given, definitely markets will take it very, very positively. I think that will stabilize the whole market environment. Today, what you see is that against US dollar, INR is depreciating, and US dollar is depreciating against all other basket of currencies. So in fact, against other basket of currencies, we are depreciating almost 20%, which is very, very scary situation. This needs to be addressed in some way or the other. It could be because of the clarity which government can provide in terms of how the tariff negotiations are going on. That can put a lot of comfort to the export-oriented market, and also the currency will stabilize, which will make it more conducive.
Okay, on that note, let me take a very quick break. But Abhishek, thank you so much for your time. We'll come to you right after this speech. We'll take a very quick break, and then, of course, after that, we'll have R. Mukundan, President Designate and CII, and Managing Director and CEO at Tata Chemicals as well, joining in very shortly. Back with the 18 Hour Budget headquarters, we've still got our 18 Hour Budget think tank here with us, and our budget editor joins in after her breakfast break, Radhika Gupta as well. But let me take the industry perspective, and joining us right now is Mr. R. Mukundan, President Designate CII and MD and CEO at Tata Chemicals, joining in on the show right now. Mr. Mukundan, great for your time. Thank you so much. Mr. Mukundan, if I just look at where India stands right now, growth clearly is holding up. But global trade, geopolitics, rates remain volatile globally. Tell me, what's the biggest industry ask? And what do you think is the realistic expectation that the industry should have from the budget today?
So I think you make a very important point. I think while the domestic market is growing and growing well in a robust manner, I think the biggest challenge for us is coming from the external sector, mainly because of the volatility there. And I think what government has done is the right thing. Firstly, when external sector is under threat, I think you focus internally to bring in reforms and then reach out to parts of the market which are willing to work with you to sign FTAs and free trade agreement to boost market access and also give them market access to a very, very fast growing Indian market. And I think this is going to augur well for us. But internally, I think we have already unleashed the reform number 2. But I think in addition to that, to support the FTAs, I think we need to look at what improvements can we make on ease of trading, ease of logistics in and out of Indian ports, Indian airports, and also how to sort of rationalize all the custom duty issues so that that doesn't become a drag on an element which is already challenging for many people. In addition to this, I think we need to continue to focus on manufacturing through targeted PLI schemes. And on top of that, MSME sector should not be forgotten. I think we all know that the MSMEs are backbone of large companies and large investments. So a three-way issue, I think focus on internal reform while you engage with the external world to build stability. At the same time, manufacturing and MSME.
Right. Mr. Mukundan, some of the FTAs are actually a double-edged sword as well, right? We're going to give away some amount of leeway of domestic industry as well. For example, to the EU, we've given them flexibility with regard to auto. How much of that is a concern for you?
I think it's a big positive. I think if you look at India's exports of auto sector, they have been driven by largely investments coming in from Japan, from Korea. So I think when these companies taste the Indian market, they're not just going to build for India, they're going to build for the globe. So there will be competition in Indian market, Indian consumer will benefit, but at the same time, the quality standards, the standards of the vehicle, the design standards, all are going to improve. And that has a knock-on effect in terms of ensuring not just the international brands, Indian companies also start exporting, accessing the international market. I think Indian manufacturing sector is ready, Indian auto sector is ready. All we are saying is make the internal factor cost more competitive. There are two large internal factor costs. One is power, other one is logistics. As long as we continue to work on them through infrastructure push, I think we would be in the right track. There is also an issue of, how do we continue to upskill our labor, upskill our people strength. I think that's the big push again from the government.
Mr. Mukundan, lastly, private capex has been slower than government capex. What would it take in this budget to meaningfully crowd in private investment back? Because what we're talking about is a Viksit Bharat by 2047, and that capex is going to come at a huge cost. The government can't be always funding it.
So I think this commentary which is there, I think was valid 2 years ago. But if you look at 26, 27, I think a large proportion of the capex has happened from the private sector. There's a 8 and 18% growth. There is about 475,000 crores of capex in only 11 projects, which are more than 20,000 crore each, mainly in electronics, solar energy, and in steel and chemicals. We know that, for example, Chhattisgarh has got the maximum number of private sector capex, which is getting implemented, coming on stream, about 15 lakh crore. Then Gujarat and Tamil Nadu have 5 lakh crore each. So we've got state-wise numbers, we've got company-wise numbers. 2,600 companies are investing close to about 16 lakh crore from private sector. And these are specific projects we have tabulated. So it was a right comment maybe 2 years ago when the capacity utilization was not high, but as the capacity utilization reached about 75-80% figure, I think private sector capex has begun to kick in. What we need to do is to ensure that we make the ease of investing, ease of production, ease of manufacturing, ease of logistics continue to be the focus of the government. I think some governments, state governments have done exceedingly well in attracting the capital, but I think central government has also done a lot, including with PLI push, including the push on infrastructure to make sure the private sector capex kicks in. Now, some of the private sector capex which will come going forward actually will not be just Indian capital. These will be foreign companies wanting to invest, especially with the EU FTA once it is signed. There's 6,000 odd companies in India. They're also going to come in and invest for the world. So I think we need to look at this in a very holistic manner. This is a build forward budget, and I think we should continue to build forward.
And here's to that, counting down to the budget. Mr. Mukundan, thank you so much for your time, and we'll see you again post the budget speech as well. Let me also welcome on board now Mr. Anand Goenka, President FICCI and Vice Chairman RPG Group, joining in on the show. Anand, hi, good morning. Good to be speaking with you once again. Anand, I can tell you about the equity markets. The mood is very somber as we go into the equity, trading today. But tell me, how would you describe the mood in the industry right now from the perch that you are at FICCI? Would you say it's confident? Would you say it's cautious? Or would you say it's conflicted or maybe bullish also?
So we have a pre-budget survey that we just got done with from FICCI, and the mood is positive. Growth levels are looking at about 7 to 8% level growths. There is a positivity in terms of private capex coming back, and the risk factors in India are at an all-time low. You look at balance sheets are not leveraged, inflation is under control. Overall, besides the external shocks that we are seeing in the world, India is actually an oasis of certainty and comfort.
To you, I think what is corporate India thinking, given that Many businesses are, of course, facing geopolitical headwinds, hurt by tariffs. What is that segment of corporate India expecting from the budget?
Right. So the tariffs that really have had an effect to a certain extent is US, but we are a largely consumption-based economy. The sectors that have got affected are again very specific, whether it is textile apparels, fisheries, leather goods, and so on. So to that extent, the impact on the Indian economy and Indian business has been fairly limited. Government has done a lot of other things to make sure that that impact is lessened, with 8 FTAs that have been signed, and the most recent, the mother of all deals, with EU. And that will have a very positive boost on the sectors that have got affected by the US tariffs. As these get ratified, I think there will be a lot of relief, and possibly or hopefully in the budget, maybe some focus on providing relief to these sectors, particularly in MSMEs, will help.
Mr. Goenka, talk to us about where we are at this juncture where private capex is concerned. We're not yet we're seeing green shoots, but what is it going to take for animal spirits to start to come back? You know, a multi-year kind of cycle, or is that unrealistic to expect?
I think a lot has happened last year to boost consumption. Income tax slabs and then the bigger GST 2.0 that came in October. After that, if you look, demand has started going up quite well. Whether it is the auto sector or the consumer sector, we are seeing a big positive shift. And clearly capacity levels are going up. That will result in increased capex over time. The few things that can be further done is a continued focus on ease of doing business, cost of doing business, focus on power, land, and other factors of production. There's a lot already happened with respect to labor codes, consumption, simplification. I think that journey just has to continue, and more visibility during the budget and going forward will certainly help.
Okay, Anand, great to be speaking with you. Thank you so much for your time today.
Thank you for having me.
Okay, let's just move on. Let's just quickly get your status check. That, by the way, is the countdown. Just 12 minutes to go before the FM is going to begin her budget speech. And one is debating if it's a Sunday, is it going to be a shorter one or a longer one? What say?
I think she would be around 60 to 70 minutes. That's going to be a shorter one.
Oh, that's how precise you're getting.
I'm going to... Looking at past trends, she's peaked already and she's now on a sliding scale of reducing the amount of time she speaks. So let's see what happens.
But the tricky stuff is in the fine print, right, Rohinton? You've gotten used to that.
It always is.
40 after 8.
It always is.
Poetry. She's been very good at using some Tamil poetry and quoting some very nice poetry. So short or long, I hope she has the poetry.
But you know the market joke which is already running around, or the meme, so to speak. She's in a red sari today.
She's in a red sari.
So, George, any thoughts? Yeah, you'll wait to give the verdict tomorrow when the institutional investors come back, right?
Yeah, obviously.
And the Nifty mid-cap has turned green, so that's a positive. So the finance minister may well be in a red sari, but markets clearly brushing off those early woes, and the recovery from the low seems to be quite decent, you know, in that sense. So markets obviously looking upbeat. But you know, we spoke about capex a bit, and Mr. Khara, you have a great sense of how capex has performed maybe over the last 5 years. What's it going to take for the animal spirits to come back where private capex is concerned? Because that could well be the clincher, right, in terms of getting a sense as to what lies thereafter.
I think when it comes to commitment, of course, there is a significant improvement in commitments as far as capital expenditure is concerned from private sector. But yes, the animal spirit which you are talking about, it will probably warrant some kind of a certainty as far as the global environment is concerned. Yeah. Because unless and until there is a certainty on that, perhaps we may have challenge in terms of animal spirit coming back. But nevertheless, I must also mention that the capex which is happening in the newer industries, which is green, particularly battery and EVs, and also cell manufacturing, etc., that is actually quite encouraging. And apart from that, the defense sector is another one which is showing a very promising outcome. So I think these are some of the sectors which will probably now take the leap forward and probably generate the animal spirit also.
Okay, an absolutely flat market. It's only a few odd sectors, select autos, wherein the monthly sales numbers have been good. Defense, of course, and the entire EMS play is what is keeping the market afloat. L&T, Eicher, M&M, they are back to the fore. Maruti as well has now inched up higher. But on the flip side, it's a bit of a tug of war because you've got IT, some of the select FMCG names, and metals are the ones. Anything to do with metals or precious metals, that's really down and out in trade. But the one voice that all of us have been waiting for, consulting editor ET Now, Swaminathan Iyer, joining in to tell us what he's expecting from the budget. Swami sir, good morning. And don't tell me casual leaves should be done away with. We're already having a working Sunday here. But your top three asks from the budget this time, what should the market look out for?
Well, I'd say that, this is, I hope this is a tough budget. That is, as they say, there is an election cycle where the first budget is a very soft one because you just won it. The last one has to be full of freebies because the election is coming. So the third budget, the one in between, is the time to get tough. And as I've said on many occasions, I think the one thing that you can really get tough on is the fertilizer subsidy. It is the one big missing reform in all this time, and Mr. Modi has talked about reform and various other things. Well, why are you not reforming the fertilizer subsidy? So I do hope that she will make a start in that. I also hope that, lots of people think the fiscal deficit, she'll reduce it to 4.2. I would like her to make an attempt to get it down even further. We have a very long way to go before we can get our debt to GDP ratio down to the desired 40% target that we're having right now. It's like 56% right now, long way to go. And this will require, therefore, fiscal discipline for a great many years ahead. Given that, after the third budget, the fourth and fifth have to be relatively soft because of coming elections, I do hope she will surprise us by reducing the fiscal deficit even below 4.2, maybe 4.1. 4.0 would be very, very good. So while others, I find, are emphasizing capex and various others as though you have to stimulate a budget, I would say rather that the third budget of a government should be the one that is a tough budget. And I hope it is one in which the fiscal consolidation will surprise by being much sterner than expected. And I hope that one way of getting the fiscal deficit down would be to start reforming this fertilizer subsidy. Mr. Chidambaram reformed the diesel subsidy when he was finance minister by changing the price of diesel a few paise every week or so. And you can do the same for fertilizer. You cannot afford to do a huge cut in the fertilizer subsidy immediately. There will be an uproar. But if you keep doing it, small amounts, a few paisa week after week, then over 2 years or 3 years, you can finally even it out. So we know now how it's to be done. Let us hope that Nirmala Sitharaman is able to catch this particular bear by the ruff and control it at long last.
Hi, Swaminathan sir. This is Radhika Gupta. I am budget editor today for ET Now, so I'm taking the liberty to ask you a question. Since you mentioned fiscal math, how do you see government and state borrowing? And do you think state borrowing, rising state borrowing is a source of concern? It's something the government and centre has to think about?
Swami sir, let me try and take that question. Is the rising burden with regard to state finances a concern in your opinion, and is this something that needs to be solved for?
Reduce gradually.
Okay, all right. We have him on a slightly difficult line, so we'll get that patched. Yeah.
Check with Mr. Khara.
Yes.
Swaminathan Iyer was talking about tackling the fertilizer subsidies there. Do you think the government will go for direct benefit as far as fertilizer subsidies is concerned now?
that could be an option which can perhaps be explored. To my mind, when it comes to ensuring that it goes to the right hands, and also the leakages and the subsidies could be avoided. Perhaps we have seen in the past also, DBT has proved to be a very successful option. Maybe it can be looked into.
And that would be, George, it would be a good thing for fertilizer companies. They don't have to wait for the government grants coming back to them. It will be on the spot and good for the working capital as well.
If you look at the agrochemical companies have been going through a tough time in the last few years, last 3.5-4 years. So definitely any agri push, anything related to the state government easing of their finances, because the budget deficit from states have been going up, and which eases in any shape or form can be very positive for these sectors.
Do we have Swami sir back with us, Swaminathan Iyer? Okay, not yet. We'll wait by for him. Just looking at the markets, nothing at all really. Not moving much. It's the usual suspects. Your BEL, CG Power, Crompton, Keynes. Hudco has moved up about almost 3% or so. Tata Motors PV, after those monthly sales numbers, that's inched up about almost 2.25% as we speak. ONGC, of course, is holding out very well. Sajid, you were mentioning the rationale why. L&T, Reliance, etc. is looking good. George, irrespective of what happens in the budget or not, is the market screaming value in pockets right now after the underperformance? Forget what will happen in the budget.
Absolutely. If you look at Nifty 50, we have been telling our investors, if you see Nifty 50 companies relative to the mid and small cap, it is trading at a 2-decade low valuations.
Yeah.
So because, FIs have been exiting Nifty 50 companies, or they are selling off aggressively, and the mutual fund inflows have been significantly concentrated on the mid and small cap space. So there is a gap which has been created. In my last 25 years of WorkX, I have not seen this kind of disparity in the valuation. And, Nifty 50 as a pocket of value looks screaming to me relative to the mid and small cap.
Would Radhika, would you also tend to agree with that? Or do you believe that this bout of underperformance we've seen within the Nifty small and mid cap basket actually offers an opportunity to us?
So I think the top, George mentioned the Nifty 50. I actually think the Nifty Junior segment, which is the next 50 stocks, and of course a lot of them have metals heavyweights as well. But it's been a laggard for a very, very long time. Yes. So that offers value. I also think the mid-cap segment tends to get a lot of hate, but now that's 33,000 crore to 1 lakh crore market cap companies. And if you look at earnings disappointments, mid-caps have been the least disappointing. They've actually done the best job on the earnings front. So I think the 50 to 200 company point actually is a very, very interesting point today.
Okay. Swami sir, I'll go back to the question that we posed, or rather that Radhika posed. I'll go on behalf of you, Radhika. But Swami sir, if you can give us a sense of what you think of state finances. Are they in a difficult position? Can we kind of improve them? How quickly? How dramatically?
You mean the government finances?
State finances.
State finances are not in very good shape. The central government had allowed them to run deficit going up to 3.5% of GDP, and that has to gradually come down. I think they will have to make a significant effort. As I said, in the election cycle, the third year is a good time to go ahead with tough measures. In that case, that should apply to the states too. I would like to point out that of the elections taking place this year, the BJP is not a significant player in the south, in Tamil Nadu or Kerala. It is almost definitely going to win in Assam, and I suspect almost certainly going to lose in West Bengal. In these kinds of circumstances, I don't think the budget has to worry about wooing people in the elections. It probably will not do so. So in these circumstances, can you tighten up on the state finances? Can you tell them, well, you need to try and get it down to 3% of GDP? I think the answer is you must try in this direction. The political economy is just right for this. This is the correct year for tightening the screws, for reducing both the central fiscal deficit and making it clear to the states that they cannot continue at 3.5% forever, and they do need to come down to 3%.
Okay, on that note, that's the countdown hour. Within seconds from now, we will have the budget speech begin. It's 11 a.m. already. This is the Super Sunday that we'd all been waiting for, the 11 a.m. speech. And let's see what the finance minister has to deliver. We're already getting the live visuals now from the parliament, where she's going to present the budget shortly from now.
Okay, very interesting. You can have